Hello guys, good morning, good evening, good afternoon, depending on where you are. My name is CPM Akan and today I'll be taking you through on IAS construction contracts. Now today I'll be specifically doing some few questions on the same. But before I do some few questions, let me first of all give the summary of the topic before I do the questions. So number one, let's give the summary. Summary here is going to help you to do some computation on questions that relate to the topic under construction contract. Topic summary number one, or step one, is compute profit or loss foreseeable. So in this case, it means that we are trying to project whether the contract will make a profit or a loss. And for us to foresee this, we need to compare the contract price and the total cost. So therefore, I will now take the contract price, I'll put there, minus the total cost. You see that? So if you subtract, you can either get a loss or a what? Profit. In this case, I am taking the total contract price minus the total cost price. So we talk about total cost price here. We are referring to the cost incurred to date plus the cost estimated to completion. The cost estimated to completion plus the cost incurred to date. You get what they call what? Total cost. You get this. Once you get this, the reason why you are interested with this one is to see whether there is a foreseeable loss or a foreseeable profit. If it is foreseeable profit loss, this loss here need to be recognized immediately into the financial statement. That is income statement as a loss. This one. Now, if it is a profit, this profit need to be what? Apportioned. Because you say that not the entire profit can be recognized into the financial statement, because this profit is obtained based on the stage of completion. And the stage of completion, for us to calculate the percentage on the stage of completion, there are two methods. We said method one, you can use the costs. Take the cost incurred to date, divide by the total costs times 100%. If it is about amount of work certified, you take the amount of work certified, divide by the cost contract price times 100% for you to get the completion stage. Immediately you find this, you go to the next stage. The next stage in this case now is to determine the percentage of completion. Yes, which they are given in two methods, or there are several depending on the examiner. Number one, it can be in the form of costs, which you take cost to date, you divide by total cost, and then you multiply by 100%. Or you can use work, which you now say certified work, certified, divide by contract price, multiply by 100%. Correct? So you'll be able to, the reason why you are using this, you are determining this particular percentage, so that you now say, out of this total profit, how much is for the current period? So you take the percentage profit here, multiply by that. Then the third stage is calculation of cost of sales. Now in this case, the cost of sales is always taken by opening stock plus purchases minus closing stock. But in this case, we don't have such a nature because we are dealing with the construction contract. In this case, you now say costs to date. How much you have incurred until now. Immediately after that, now you need to say less costs, less previous cost, which means these are a cost for the previous year that have been accumulated to this year. So you subtract. Correct? Now you have now the correct cost to date for the period. Now from here you now say add add foreseeable what? Loss. Because loss is a cost. So you add. Once immediately you add, you will get now the total, the cost of sales. So the cost of sales is cost to date minus any previous cost plus any. Then number four is determine the net profit. Net profit or loss. So in this case now, because you have already the percentages here, these percentages will be able to be used to determine now the correct revenue for the period, because it will be the percentage times the total revenue, percentage times the total cost for you to get what? Net profit. So in this case, you can now say revenue times n percentage, then total cost times n percentage. So the answer you get is either a profit or a loss, like that. Then the last one, number 5 stage, the 5th stage, is to determine the amount due. Determine now amount due from or to. Now, amount due to, amount due from means that we are the one receiving as a construction contract entity. So it is our asset. But if it is amount due to, it is a liability on our asset. Therefore, it means that when you do some computation here and you find that it is a positive, then it's receivable. Then if you do computation here and you find that it's a negative, it is payable. For instance, how do you go about this? You take cost to debt. Let me, it's a problem here. Here you take total cost times n percentage. Total cost times n percentage, the percentage you have determined here, you get here, then you subtract to get the answer. Now we go to this amount. So you say now cost to debt, correct? Then after that, you now say add recognized profit, loss. A profit you add, correct? If it is a loss, you subtract. Then immediately after that, you now less your billing, less progress billing. Now this progress, if immediately less progress billing, you can either get a positive or a negative. Positive here means it is receivable from, which means amount from the client. Then if it is a negative, means amount to the client. So it is a liability. So this negative is treated as payables in the financial statement of financial position, while this positive here is treated as what? Receivables in the financial statement of financial position. So let's see examples. So kindly open your notes and go directly to the questions that you have there. Let's begin with the question 1. So remember, I will be sharing also these notes also in our YouTube. Immediately after finishing, I will be going directly to our YouTube and upload this particular computation together with the notes. So therefore, you don't need to worry too much. So let's do an example, class. So let's go to example 1. Yes, remember it has not been tested for a while, this topic of construction contract. So the last time that was tested was in 2021. 2021. So you'll find that it has not been tested for a while. So be careful with the CASNEP today's notes. So let's see the question. A numerical example is given below here. So let's read the question. The question says, suppose that a contract is stated on 1st of January 20x5 with an estimated completion date of 31st December 20x6. The final contract price is 1.5 million in the first year to 31st December 20x5. Roman 1. Costs incurred amounted to 600,000. 2. Half the work on the contract was completed. 3. Certificates of works completed has been issued to the value of 750,000. 4. It is estimated that a reasonable certainty that further costs to completion in 2006 or 20x6 will be 600,000. What is the contract profit in 20x5 and what entries would be made for the contract at 31st December 20x5? If A, profits are deferred until the completion of the contract. B, a proportion of the estimated revenue and profit is credited to profit or loss in 20x5. So that is the question you have been given. Before we do any question, before you do any computation, ensure that you understand each and every part of the question. First, let me go through again. Suppose that a contract is started on 1st of January 20x5. That is inception period, with an estimated completion date of 31st December 20x6. So how many years are those? 2 years. Then the final contract price is 1.5. So I extract that information. So contract price is equals to 1,500,000. Correct. Cost incurred to date. Costs to date 600,000. Correct. Half the work on the contract was completed. Half of the work of the contract is completed, which means this one here, 1.5 million, this contract price, half of it has been completed. Therefore, that means what? Work certified. Work certified. Certified is half of this, 750,000. Correct? Then you have been told you are required to what is the contract profit. Contract profit for which year? 20x5. And what entries would be made for the contract at 31st December 20x5 if A, profits are deferred. Correct. A, profits are deferred. Correct. Now, when they are saying profits are deferred, it means that there is no profit for the year 20x5 because revenue and profits are deferred to the following year. Which year is that? 20x6. So therefore, here in this case, you can say net profit is nil. Why? Why? You put a reason why. Why? Because revenue is deferred to which year? 20x6. But cost to date is recognized as receivables. As cost for the period. That is very important. B, a proportion of the estimated revenue and profit is credited to profit or loss in the year 20x. So there is no deferral in this case. Therefore, for me to determine this, I now say certified work 700,000. Cost to date 600,000. So profit 150,000. So that is how you are supposed to answer that question. Example 2. So we go to example 2. We go to example 2. So by the end of example 2, you'll be able to answer example 3 and example 4 and 5. Example 2. Centerpoint Company has a fixed price contract to build a tower block. Fixed contract. This one is now the fixed price contract method. Now, contract. The initial amount of revenue agreed is 220 million. At the beginning of the contract on 1st January 2026, the initial estimate of the contract cost is 200,000. At the end of 2026, the estimate of the total cost has risen to 202 million. During 2027, the customer agrees to a variation which increases expected revenue from the contract by 505 million and causes additional cost of 3 million. At the end of 2027, there are materials stored on site for use during the following period, which cost 2.5. Now, Centerpoint Company have decided to determine the stage of completion of the contract by calculating the proportion that contract cost incurred for work to date bear to the latest estimated total contract cost. The contract cost incurred at the end of each year were 2006, 52.52, 2007, 154.2, then including materials in its store, 2008, 205 required. Calculate the stage of completion for each year of the contract and show how revenue, costs, and profits will be recognized in each period. Okay? So let's see. First, we have to ensure that we get the points right from the question. Centerpoint Company have a fixed price cost to build a tower block. Correct? The initial amount of revenue agreed is 220 million. At the beginning of the contract on 1st January 2026, the initial contract is now given there as 2006. is the beginning of the contract. That is initial. That is inception contract, inception period, and it's running for how many years? 3 years. That is 2006, 2007, and 2008. Very correct. Then we have been told we extract information carefully. The initial amount of revenue agreed is 220 million. So revenue. 220 million. For how many years? 3 years. Correct? Then, at the beginning of the contract on 1st of January 2026, the initial estimate of the contract cost, now the contract cost is 200,000 at the beginning of the year. And then at the end of 2006, the estimate of the contract cost has risen to 202. At the beginning, 200,000. At the end, 202. That is 2006. Therefore, it means in this case now, we can now say, okay, let me put here now 20x8, then 20x7, and then we have 20x6. Correct? Then it means we may say now revenue it has been estimated to be 220 for 3 years. You can see the revenue there. Then they are also saying at the beginning of the contract, on first this one, the initial estimate of the total cost is 200,000. But by the end of this year, it would have gone to what? 202, which means there's an additional variation. Because of that variation, they have added 2 million on top of that. Then they are also saying during the year 2007, the customer agrees to variation which increases estimated revenue. So revenue is increasing. So due to variation. So there was no increase in revenue in the year 2006, but there was an increase in revenue in 2007, 5 million. Then also 5 million, like that. How much is the total? So total revenue, this is 220 million, this is 225 million, and this one is 225 million. Then we list now the total cost. So we have now the total cost. Total cost in this case is made up of two. We have cost to date, and total cost to completion. That is what we have been told. Total cost is made up of two. Total costs is made up of cost to date and total cost to completion. Now, this case we have been told for this here, we have that, we have also this, and we have also that. So let's see what is going to happen. Let's see what is going to happen in this case. So we have the total revenue here. So let's see the total cost. Cost to date. Do we have it? Cost to date? Yes. The last part of the question. Or even before we reach there, let's continue first. From paragraph 2. Revenue has increased by 5 million from the year 2007 continuously. Then we go to second part of the same, and causes additional cost of 3 million at the end of each year of end of 2007. So 2007 there is an increment of, so in this case it means, for this case it was 2000, then it has gone to 2002. So 2002 plus 3, you get now 2005. 205. Now from 2005, what is happening was in 2205 for the year 20x8. Is there anything? Which means it's a continuation. So therefore, also this one will remain 205 million. Those are costs for that matter. Now, we want to determine the cost to date and total cost to completion. Now, continuation. At the end of 2007, there are materials stored on site for use during the following period, which cost 205 for the following period. So it means this 2.5 has been included in the year 2007, but they belong to which year? The following year, the following period. That's 2009, 2008 for that matter. Correct? Then, so it means we have to remove the 2.5 from here. We have to remove 2.5 from here so that we get the correct figure. Centerpoint Company have decided to determine the stage of completion of the contract by calculating the proportion that contract costs incurred for work to date bear to the latest estimation total cost. The contract costs incurred at the end of each year. Underline that statement. The contract costs incurred at the end of each year are given now. That is what we call now cost to date. In this case, you have been told it is now 52.5 million, 52.52 million. Here you have been given 154.2 million. And then the last one you have been given as 205 million. And then they are saying in 154.2 million, including materials in store. Materials in store, we were given in paragraph 2 as 2.5. So it is inside here. And therefore it means that amount is not for this period, but it's for the following period. Now, 2005. So we can now calculate the total cost to completion, which is the balancing figure. So what is the balancing figure? 205 minus this, you get the balancing figure. 205 minus this, you get the balancing figure. 2,205 minus this, you get the balancing figure. And if you use your calculator very well, you will find that this one will give you 49. This one will 149.480. This one will give you 50.80. This one will give you none, because it will be this minus that, you get that. That is now how you are supposed to calculate this. Now, what will be now the forcible profit? What is the profit now here? Profit 220 minus the total cost, 225 minus the total cost, 225 minus the total cost. If you subtract now this minus this, this is in millions. In millions, I can convert into thousands to be here 18,000. So here will give you 20,000. And here, this minus this will give you that 20,000. And this one will give you 20,000. Now, that is what you have. This is the profit now. Now, out of this, convert now into percentage. Stage of completion. Stage of completion. So which method are we going to use to determine the stage of completion? We have been given from the question. The stage of completion has been calculated using the formula cost to date divided by estimated costs. That's what we have been told from the question. So costs. So let's see now. In this case, you now cost to date divided by total cost. Therefore, your work will be very simple. Cost to date for the year 2006, cost to date is 52.52 divided by the total cost 202. Then you get the figure. This one is 154.2 divided by the total cost. But there is a problem. There is a problem inside here. We are told that it is inclusive material cost that is for the following period. So we have to subtract. So you take your calculator and subtract that correctly. Take your calculator and subtract it correctly. So subtract class, subtract this 2 point, so it is 154.2 minus 2.5, that is inclusive there. So this gives you 7. This one is how much? This is 151. So here it will be 151.5.7 divided by the total, which is 205. Then from there, this one will be 205 divided by 205. So what is the percentage there? So if you work out this one, you will get 26%. This one will give you 74%. And this one will give you 100%. So what was the question saying? The question was saying, calculate the stage of completion for each year of the contract. Stage of completion is correctly done here. And show how revenues, costs, and profits will be recognized in each year. Show. So now, therefore, we need now to show now the revenues here, expenses, and profits. That's what we have been asked to do. So our work will be very simple work. Now, we now say, okay, we have 2006, correct? 20x6 we are using 26%. Therefore, we can now say, okay, revenue, then cost. In this case, it will be revenues of how much? 220 times 26%. Cost 202 times 26%. Correct? So when you work out carefully, you will get here. Here you will get 57,200. If you multiply this one, you will get 52,520. So what is your net profit there? 4,680. In which year? 2006. Then 2007, revenue 2007, revenue is here, 225. 225 times what percentage? 74%. Then cost we have 205 times 74%. What is that figure? If you work out carefully, you will find 166,000. So you get here 166,500. Then cost here, work out, you get 151,700. If you subtract, your answer you get is 14,800. For which year? 2007. Then go to 2008. Revenue. Revenue there is 225 times what percentage? 100%. So it's just 100%, which means it will remain the same. Revenue there of 225. Then cost for that matter, you get 100% still is 205. So if you subtract, you get what? 20,000. So you can see what is happening here. Now, out of this, we have been told you have to show exactly. This is the year 2006. This is the year 2007. This is the year 2008. So this is how you are supposed to recognize this. But on this note, we have now, if for example you are here in 2007, this amount of revenue here is inclusive the revenue for 2006. And 2008, the revenue here is including also revenue for 2007. So for that matter, we need to split. We can now say recognized in the previous year. Recognized in the previous year. Then current recognition. This year now, the current. Now, in this case, previous recognition, which means we don't have any here. Correct? But when you go to the previous, in the year 2007, we have previous recognition of how much? Out of 156,500, the previous recognition is 57,200. So previous in this case is 57,200. Correct? Now, here we have 151,700. Previous was 52,520. You can see previous. I'm dealing with the previous. So for the first current year, there is nothing. So if you subtract that, your answer you get is 4,680. When you go to the previous, go to 2008 also, you come here. So 2008 is this, yes, but 2007 is 166,500. Cost 151,700. So what is the net profit for that matter? Previous 14,800. 14,800, like that. Now, how do I get the current? For me to get the current, for example, in this case, it will remain the same. For the current, it will just remain the same. But when it comes to this This is for this year minus the previous year, you get the current. So in this case, it will be 166,500 minus 57. So if you work out carefully, you will get 109,300. Then this minus this, your answer is 99,180. If you subtract, your answer is 10,120. When you go to this one, also do this minus this, your answer is 58,500. Cost is now this minus this, your answer is 53,300. So if you subtract, your answer is 5,200. So why are we doing this? Is because the current year's profit is there. When you want to go to the second year, you have to say the profit brought forward plus the revenue for profit for this current year. You add, you now get the correct conclusive figure. So therefore, we are saying if you say this minus this, you will get the current revenue. This minus this, get the current revenue. That is how you are supposed to get that particular element. So example, we go to example 2. We go to example 2. Now, for this case, now I will be leaving some work for you to do as homework, assignment. But before I do that, let me select an example that is a bit having some challenges so that we all work together. So the remaining now I leave you to work on the same. Let's go to example. The next example there says, the main business of Santolina company is construction contracts. At the end of September 2023, there is an uncompleted contract on the books, details of which are as follows. Contract B. Date commenced 1st of April 20x1. Expected completion date 23rd of December 20x3. Final contract price 290,000. Costs to date 30th of September 20x3 210,450. Value of work certified to 30th September 20x3 230,000. Progress billing to 30th September 20x3 230,000. Cash received to 30th September 20x3 194,000. Estimated cost to completion at 30th September 20x3 20,600. Santolina calculates percentage completion based on work certified. So that is the formula for stage of completion required. Prepare calculations showing the amount to be included in the statement of profit or loss and statement of financial position as at 30th September 20x3 in the respect of the above contract. So we have been given information. The stages are 5. So in this case, we have to do stage 1. Stage 1 is compare the contract price together with the total cost. So compare. So you can say the contract price is how much? 290,000. Cost to date is how much? 210,450. You are subtracting. Then they are saying costs to this. Then there is also down there estimated cost to completion, which means after this cost to date, there is a cost to completion. So we can now say estimated cost to completion 20,600. If you subtract, your answer you get is how much? 58,950. 58,950. This is estimated profit. Now, if you want now to calculate the percentage, stage of completion, you take what? So you have been told use what? Work certified, okay? So you get work certified, that's the question you have been given. Work certified, divide by price, contract price. So in this case, work certified, how much is the work certified? From the question you have already been given, value of work certified, 230,000. 230,000. Divide by contract price, 290,000. 290,000. So if you multiply by 100%, your answer you get there is purely 79 point what? If you round off to 2 decimal places, 79.31%. After that, what do you do with this? Now, out of this, it means that the 58,950 is not the correct profit, but this estimated profit. Therefore, what is your net profit? Then your net profit is very simple now. It is this times that. So which is 79.31 times 58,950. Your answer around there is you'll get 46,753. Now, if you want now to prove whether it is correct, you can go and prove this if it is correct. Now, this is how you can prove. Number one is very simple. So you can now say statement of profit and loss. Statement of profit and loss, you will have now revenue. How much is the revenue? 290,000. But you are not receiving all. You are not recognizing all. You only recognize 79.31%. Total cost. Total cost in this case is 210,450 plus 20,600. Then you cannot recognize the entire, but you recognize only 79.31%. So how much is that? If you do calculation very well, you'll find that this one will give you 230,000. Then this one will give you 183,247. So if you subtract, you get 46,753. You can see it is the same as what is there. Then you go to statement of financial position. Statement of financial position. So statement of financial position, we need to show the assets first. We need to show the assets. In this case, we can now calculate current asset or liability. So let's see. Then you are told, according to the summary I gave, you say cost to debt. Have you been given cost to debt? Then you add profit. Add profit. Attributable. Attributable means the one that has been allocated. Attributable. So cost to debt you have been given in the question as 210, which is this one also. Cost to debt 450. Then attributable profit is now 46,753. You add. If it was a loss, you could have put here loss. But this is a profit. So you get 257,203. Then you now say, okay, less progress billing. Progress billing here, progress that has been billed is how much? 210,000. So how much is amount due from, because this one is more than this is called from. So if you subtract, you get how much? 47,203. From here, check the question again. There is something, we have now receivables in this case. Receivables in this case, check. How much has been billed? We billed them 210,000, but they have only paid us 194. So it means there is something receivables also. So 210 was billed, correct? But we have only received 194,000. So how much is receivable? We still awaited 16,000. So therefore, this is how to calculate your work. And that is exactly what the examiner wanted you to do. So the examiner wanted you to determine, one, know how to follow the steps. This is step one. You have known that there was what? There was a profit here. If there was a loss, I've already explained that in our previous notes, that if it is a loss, we will be affecting here. If there was a loss, you'd have done now calculation by saying, okay, loss, maybe a loss of 16,000, for example. You cannot recognize the entire. It will be 16,000 times the percentage remaining. Percentage remaining here is 100 minus 79.31. You see? So it will be 16,000 times the remaining percentage, so that you recognize that you put it there. So this one will be more. Then you subtract. So that is how you are supposed to do that particular question. So thank you so much and have a blessed day. Kindly do the remaining example. If there is a challenge, let me know and I will be able to do the same with you there. When you are ready, just contact me and say whether you have understood or not, and I'll be able to take you through again. So thank you so much and have a blessed day.